All right, great. Welcome everybody to another Rocket Dollar webinar. It is 2 o'clock. We can maybe wait for a little bit longer, see if anybody else jumps in here, and then we'll go ahead and get started.
Great.
How's that sound? Sound pretty good?
Yeah, I think we can give it a minute or two and let some folks come in. While we're doing that, I guess I can go through some housekeeping items here for those that are joined so far. So you'll notice over to the right-hand side of your screen, there is a chat functionality. The chat is private, so you should be able to go ahead and type a message in there to us. And more importantly, if you have questions throughout the presentation, just feel free to drop those in the chat, and we'll take as much time as we need at the end. I know that we have some questions that we get pretty regularly. Nick got some questions ahead of time, so we'll answer those in addition to any other questions that might pop up. If you want to hide the chat and just kind of to view the webinar, and it's the best way possible, there's a little right-hand arrow right to the left of the chat. That'll close the chat, and then you can actually click on the two diagonal arrows in the upper right-hand corner to toggle to a full screen mode. And then the two little monitors all the way to the right will bring the chat back. So just a couple of things to keep in mind as we go through the presentation. And, with that, I think, in an interest of starting on time, we'll go ahead and start. A replay of this event will be made available to you a few hours after this event. Anyone that registered will get a copy of that. And I know Nick and the Rocket Dollar folks plan on sharing this with their audience again and posting on the website as well. So it'll be available for those that joined a little bit late or couldn't make it today.
Absolutely. Okay, great. So again, just want to welcome everybody. This is Nick with Rocket Dollar. For anybody who's not familiar with Rocket Dollar, we are a self-directed IRA and solo 401k provider. And we decided to partner with Energea and take a look at their available investments. We have Tyler Hurlburt and Mike Silvestrini. Did I say that right, Mike? All right, fantastic. So I'm going to turn it over to you guys. Take it away.
Thanks a lot. Appreciate it. And thanks for everybody for taking the time out of your day to join us here and learn a little bit about our investment management strategy. I'm one of the co-founders here at Energea. It's my second enterprise. I also co-founded a solar company called Green Skies based in the northeastern United States that ran many solar energy projects. We sold that company, my partners and I, in 2017. And then started Energea as a way to share our experiences in the renewable energy industry with a broader base of investors. So we've created this product in order to open the participation in this asset class. And it comes from a long background of a lot of travel and exposure to international markets as investors, but also as travelers and in the nonprofit sector. So we've spent a lifetime really traveling and participating in emerging markets as well as domestic market. And that all kind of comes home to roost here at Energea. So we hope, thanks for the opportunity to share these products with you guys today.
Great. Thanks, Mike. My name is Tyler Hurlburt. I'm the Director of Investor Relations here at Energea, former licensed financial advisor and wealth manager. So I've worked at a lot of various Fortune 50 firms, TIAA being the most recent, Prudential, Wells Fargo, Ameriprise. Most of my experience has come in the personal financial service, wealth management industry. So extensive experience with portfolio management, risk mitigation, tax and estate planning. Graduated from the University of Connecticut and then got my MBA from St. Joseph's University in Philadelphia. Been with Energea now for 2 years almost, and really think it's a great marriage of kind of my skill set in terms of my knowledge of financial markets and investing, but also with my values of really trying to make investments that not only have strong financial returns but also a nice environmental and social impact as well. So what are we going to cover today? We are going to talk a little bit about, just Energea at a very 30,000 foot view. What are we? How does it work? We'll show a quick video. We'll talk a little bit about our year of 2021. It was a really great year for Energea, so we'll share some highlights from that. Then Mike will talk specifically about the portfolio structure and performance of the various investments we offer here at Energea. So we have a portfolio of solar projects in Brazil, the US, and Africa. We also have a Reg D hydro project that Mike can talk about as well. I'll then close off by talking a little bit about alternative investments, inflation, and how alternative investments have really started to come to the forefront of portfolios over the last 5 to 10 years here. And we'll close with just a quick tutorial on our investment platform and what investing with us looks like, in particular, if you were to invest with your Rocket Dollar self-directed IRA account. So first, what is Energea? Energea, we seek to connect, Mike touched on it a little bit, but we seek to connect investors like yourselves to premium renewable energy projects around the world through our online platform. So, there's no ticker symbol for Energea. When you invest in Energea, you're investing directly through our online platform. And we're here to kind of provide the investment and asset management to bring to you, the investor, only the best, highest yielding, lowest risk renewable energy projects. So we do all that due diligence on the front side and then bring to you the very best projects to invest in and enjoy those steady long-term dividends that go with these renewable energy projects. So with that, we're going to take just a minute and a half here or so and watch a quick video that outlines a little bit more about Energea and how it all works.
The threat of climate change is a liability for everyone. Our mission at Energea is to empower individuals to invest in renewable energy in response to the climate crisis. So we built a digital marketplace that connects investors to renewable energy projects.
We assemble projects with similar characteristics into portfolios and sell stock in the portfolios through the digital platform. To buy stock in these renewable energy projects, first, create an account. Then, use the platform to view Energea's project inventory. Perform your due diligence and select investments you prefer. By investing in multiple portfolios and projects, you reduce risk through diversification. As the projects are turned on and produce electricity, they sell that electricity under long-term contracts. Cash flow is first used to pay the project's operating expenses, and the remainder is distributed to shareholders pro rata. Investing in these projects will not only give you great long-term dividends, but will help ensure a more sustainable future for generations to come. Own your piece of a carbon-free world.
All right, so that gives you guys a little taste of what we're all about here at Energea. I mentioned a couple things. We mentioned a couple things during that video that we'll get to in a moment. But 2021 was really a nice year for Energea. We've grown the business through retail and institutional investors to just over 100 million in assets under management as of this webinar. 31 projects. We were talking about it before the presentation, and I think it's probably slightly higher than that now. We've added a few new projects in 2022, so I think we're at
30.
Maybe 35, 36 projects. Mike, is that the number we think?
I think it's 38.
38 projects. Probably just over 92 megawatts, either constructed or under construction at current, and just about a 12.75% realized IRR between all of the investment portfolios and projects available on the site, with about 5 million megawatt hours of clean energy created. We mentioned in the video kind of the structure of the investments, but I think this slide does a nice job of answering probably one of the most common questions we get on Energea, which is, when I invest, what am I actually investing in? What am I buying shares of? Because it is an equity investment. That's important for you to realize. So, here you'll notice you have Energea Global to the right, which is us, the parent company. You have the retail investors off to the left, And what are we investing in? You're investing in these boxes here, solar in the USA, Solarize Africa, community solar in Brazil. These are all set up as Delaware LLCs. So they are, single purpose entities designed to own the projects that are associated with the respective portfolios. So each project down below that, you'll see is its own, single purpose entity. And then what happens is every single month, those projects collect electricity, generate electricity. We collect revenue from the generation of that electricity. We pay operating expenses for those projects. And then there's this bucket of cash that's left over. That cash, we call it the cash available for distribution, or CAFD, every single month gets rolled back up to the Delaware holding company, the portfolio company that you're investing in. And as a shareholder in that entity, we distribute monthly dividends to you, the investors, and to ourselves as investors alongside you, pro rata. So, we're trying to connect and tie you to the investments as closely as we possibly can without a bunch of middlemen getting in the way to, dilute the returns. We want to try to connect investors as closely as possible to those investments as we can.
Hey, Ty, I think it's also worth mentioning, I'm getting a little bit of an echo here, but that these LLCs are treated as corporations for tax purposes. So even though you have membership interest in the limited liability companies in Delaware, you're going to get a 1099 at the end of the year to dramatically simplify the taxation of being an investor and holding these real assets. So it's an LLC treated as a corporation, a C Corp to be specific, for tax purposes only.
Great. Yeah, that's a great point. We recently made the switch from K1s to 1099 and gotten a lot of great feedback from our investors about just how much more simple that is to manage from their own personal tax perspective. So now we're going to take a minute. Mike's going to take a minute as the asset manager here, the portfolio manager, to go through each of our investment opportunities, give you just a high-level taste of what's going on in each of them, some of the updates and developments happening within those portfolios and projects. And so with that, Mike, go ahead and take it away.
Thanks, Ty. So the portfolio that we're managing in Brazil is really, we think we've really found a diamond in the rough here. Brazil, in our mind, is the heavyweight of the solar energy industry right now. Projects have very attractive IRRs, even when risk adjusted for the currency exchange risk that we have while investing in Brazil. So we're getting upper teens unlevered IRRs in projects there. So they're throwing off a lot of cash. It's rare to find that type of opportunity anywhere in the world for solar energy projects. So that's where we started off with, and we beelined straight to Brazil upon founding the company. The co-founder, his name is Chris Sattler, actually picked up his bags and moved to Rio, stood up our Rio-based office, and we now manage many projects for a number of different investors down there, including hopefully folks like yourselves. We've put 5 projects into this portfolio with a combined cost of around $15 million. And as we each day, investors come onto the website, they participate in that Delaware holding company that owns those 5 projects. And those projects are, again, part of a community solar architecture down in Brazil. So the way that these projects work is, instead of selling all the electricity to a utility company or to a single off-taker, these projects have thousands of subscribers. That's how community solar works. So we might have small businesses or even residences, and they come onto a different platform managed by Energea and subscribe for the use of energy. And by subscribing to the solar power plant, that entitles them to a percentage of the electricity produced by the plant. And the electricity that we sell to our customers down in Brazil is about 15 to 20% cheaper than the electricity they would otherwise procure from the grid. And we're not on their roof or anywhere on their property. So it's a very seamless process for them to enroll into that energy product. So each month, as the plants, these are all tracker-based, ground-mounted plants on sites that we control. There are Iguatama is fully constructed. Pedro de Indaiá is under construction, and we're going to launch construction of the 3rd project, Devonópolis, here in the 2nd quarter. And then we have 2 more projects that are owned currently by the Delaware Holding Company that we hope to start construction on later this year. So with the 15.3 net IRR, and again, that's unlevered. And when I say unlevered, I mean that once we stabilize the assets and they're producing electricity, we may pursue low-cost debt and recapitalize the assets, and that would lever those returns, and we'd have a great dividend recap distribution in that event. So one of our favorite products here, and really kind of sits in the middle of a global portfolio of renewable energy assets in our mind, is those projects down in Brazil.
Yeah, Mike, I don't know if you wanted to take a moment too and just talk a little bit about some of the new developments there with the new law 14.3. I thought that was pretty relevant to just that market in general, and just kind of further solidifying our viewpoint of that strong market, only getting stronger.
Yeah, when we first got down in Brazil, it was about 2018, and we were relying on some utility level policy and regulator level policy that created this community solar architecture. But now that is a law. And the difference between policy and law is that law is much harder to reverse. So we feel that we've only hardened the shell of the policy that drives this type of program. Brazil has a major problem right now in its energy architecture. It is primarily driven off hydroelectric power, and rainfall has become more frequent in some cases and less frequent in others, but ultimately resulting in a problem for the grid operators. They are really calling for and summoning investors like you and us to go to Brazil and stand up these solar energy systems so that they can help manage their grid architecture. So we keep seeing doubling down of the Brazilian government in order to make it easier and faster for us to make these investments. And they also have streamlined some of the fees and taxes that we pay as solar energy investors down in the country. So all in all, it's a favorable political landscape for renewables. It's a favorable energy landscape for renewables. And we think that with the real being so weak right now against the dollar, it's a great time for us to buy up Brazilian assets. So let's shift over to the United States. And again, the way that we look at investing is a diversified strategy. We want to blend together those exciting opportunities that we have in Brazil with the maybe more boring, but more well-known and a little bit easier to grasp projects here in the United States. So we introduced the U.S. portfolio in 2021 to ballast some of the emerging market exposure that we have in the Brazilian portfolio. The U.S. is obviously a place where rule of law and currency are not issues, or at least, we hope that they're not issues for the time being. But we can really hang our hats on what we know about our domestic economy. We've done now a pair of projects. Both are AAA rated, so you can get that type of credit here in the United States. We can hang our hats on Eversource, the utility company in the northeastern part of the country, to pay us for the electricity we deliver. And we can also count on the city of New Canaan, which is one of the wealthiest zip codes in the United States. That's another off-taker of ours as we solarize their school systems. So it's a small portfolio, but it really has operational cash flows. It is producing dividends on a monthly basis. The projects have exceeded our projected electrical production to date. So we're happy to see the systems working properly. And all in all, we think that while the yield, you can see it down there at a 6.3%, while it's a forward-looking statement and we can't guarantee this, we feel confident that we're going to be able to move that up into the 7s and 8s as we introduce new projects that are in the pipeline into this portfolio. But ultimately, it serves a purpose in a diversified blend of assets. Last thing I'll say about the United States is that it's one of the trickiest places to do solar energy anywhere in the world, because on one hand, the United States levies a tariff or an import duty when we buy solar equipment from China. And that duty ranges from 17% to 230% of an increased cost on that solar equipment. Obviously, that makes solar less competitive than it would be without those tariffs. Conversely, the government offers us a tax credit, a 26% investment tax credit. But since this company that you're buying shares in when you invest in solar in the United States, again, that Delaware LLC, All it does is own solar projects. So there's only so many tax credits that are useful to solar in the USA. And we have to monetize the balance of those tax credits by introducing the projects to tax equity investors who are specialized in investing in projects specifically for their tax attributes and not so much the cash attributes. So generally, the Solar in the USA company enjoys the cash flow from these assets, and then we sell the tax credits in order to reduce the cost of the projects to third parties. So that's really the Solar in the USA. It's a bit wrinkly underneath, but it works great, and we think that it serves an important purpose in a diversified solar portfolio. Next, we have Africa, which also serves a unique purpose. Number one, it's opportunistic. There's no continent in the world that needs more power than Africa. Substantial portions of Africa are still not electrified. And those that are electrified don't have enough power generation to go around. So there's frequently blackouts. When we work with our development company in Cape Town, I had a call with them this morning. In fact, it's not uncommon for one of the participants from our partner in Cape Town to not be able to participate because they're on a rolling blackout, a scheduled blackout where the utility company tells everybody, you're going to lose power between 4 and 6. And these other part of the city is going to lose power between 6 and 8, and so on. So tremendous demand for energy. That said, customer credits, you're not going to find Eversource in the city of New Canaan, anywhere in Africa. So we have to be a little bit different in the way that we approach our investment strategy. So instead of building larger projects, we put small amounts of money to work in many different projects, diversifying across a wide breadth of customers. We only agree to invest in about 10% of the projects that come to us from our development partners down in Africa. So we pass on 90% of the stuff. But those 10% that we do retain, companies like Spar Markets, which is a multi-billion-dollar Belgian-based publicly listed company, Nimby Fresh, a multinational agricultural operation, or Anchor Foods, who's a household brand in South Africa and a food manufacturer. When we do select one of these companies, we feel pretty good about it to begin with, and then our diversification strategy helps us avoid issues if any one of those customers is unable to pay us on time. So all in all, we're hitting double digits returns in Africa. It has a tremendous impact on people. For those on the call here interested in impact investing, this is the real deal. It really does have a meaningful impact on these communities, and not only the people that we're serving, but the businesses and the communities around them that enjoy access to additional power sourcing. So all around good portfolio financially and impact wise. And we think that it really complements Brazil and the United States in a diversified portfolio to give our investors that double-digit yield that they should be looking for in today's market, but supported by a diverse set of different policies, currencies, technologies, and the types of markets that we work in. Lastly, speaking of technological diversification, São Fernando is a hydro project. It was actually the first asset that we acquired down in Brazil. Quite frankly, it's my first hydro project I've ever developed. I've done almost 500 solar projects in my career. This was the first hydro project. And hydro is not easy, but it is a pretty wonderful asset to own, as our investors in São Fernando lately are learning pretty quickly, because the dividends have been really attractive out of this portfolio as the rainy season is starting to pay off as we get into the year here. So this project cost $2.5 million. It was fully funded by a wide breadth of investors who came to the platform seeking yield. We sell all the power to a gym chain that's owned by Blackstone, and they have an excellent credit. They are the largest gym chain in Latin America, and gym chains have sort of a checkered credit past in the United States, but this one's a little different. It's extremely profitable, and it's a virtual monopoly. So we like our position here, selling the power to the gym chain. But you also notice there's no gym chain in that photograph of the project. We are remotely selling that power. And if the gym chain ever defaulted on its obligations to procure the power that we generate for them, we could pretty easily dispatch them and plug another customer into this power plant. And we produce power that's about 40% cheaper when we're selling power at a price that is 40% cheaper to the gym chain than they otherwise would be getting power from the local utility. So very sturdy. They're not going anywhere. As long as they're in business, they're going to buy our power. And we're yielding double-digit returns off something that has a really high capacity factor versus the solar plants. So again, whether it rains or it shines in Brazil, we're in the black, and that's the purpose of technological and geographical diversification.
Great. Thanks, Mike. And any questions you guys have on the returns, how this all works, feel free to, at the end of this presentation, we'll include our contact information. But my information here is just Tyler, Tyler, at Energea.com. Feel free to also ask a question in the chat. At any point, we'll cover those towards the end of the presentation. So I want to shift gears here and just talk a little bit about alternative investments as a whole. So I know that many of you are probably familiar with alternatives, having rocket dollar IRAs. Self-directed IRAs have become a very popular way to hold some of these alternative investments that you can't hold in a traditional brokerage account. But as you can see here, alternative investments are really moving through the roof. So if you go back to 2004, it was a $2.5 trillion market cap. And as of 2020, it's just north of 15 trillion. And that's only grown over the last year and a half or so. But alternative investments can basically include anything that's not a stock or a bond investment. So real estate, private equity, any real asset, energy infrastructure, renewable energy, as we're offering, cryptocurrency, art, collectibles, racehorses, anything that is not your traditional ticker symbol, stock bond investment could be lumped into the alternative bucket. And basically as yield and as sources of yield in the bond market in particular have started to dry up of late, alternative investments have been a really nice, attractive way for investors to not only further diversify their portfolios, but also get after that really attractive and sought after yield that they can't find elsewhere. Coupled to that, over the last year, we've only seen that number grow and go up in terms of the move to alternatives because of inflation. So the U.S. inflation rate jumped 7% last year. It's the highest jump in nearly 4 decades. It's only moved up in 2021. I think the CPI, the last time I looked, as of March, was 8.5%. The core price index, which just excludes food and energy, was up 5%, the most since 1983 last year. And generally, during times of rapid inflation, investors tend to gravitate towards these alternative investments and any kind of real asset, something that they can actually feel, touch, smell, as opposed to kind of market investments. So I think one of the nice parts about Energea's investments, and I know Mike can talk to this a bit too, is our contracts all start with a fixed price of electricity. So anytime we sign an agreement for somebody to buy the power from us, it's called a power purchase agreement or a PPA. It generally starts with a fixed price of electricity, and then we adjust those contracts annually for inflation. So if inflation does continue to kind of run a little bit out of control, the way our investments are structured, we're in a nice position to capture that upside.
Yeah,
Mike, did you have anything you want to say on that?
Today that was interesting, and I don't hold me to this, but something to the effect that 40% of every dollar in circulation has been printed in the last 24 months. 40%. So I don't understand how that could really result in anything other than inflation, but that's why we like to diversify it across currencies. Just as importantly, if the U.S. truly outprinted our competition in this past couple of years, then maybe taking some positions in the Rand and the Real makes sense, and perhaps not, which is why we offer all three as an option. But that's a great point, Tyler, about our contracts. It's critical. We foresee a higher inflationary period ahead of us. So when we sign an energy rate, we want to make sure that we capture that inflationary action so that our investors remain right where they are with that return. So it's a critical part of the product.
Yep. Yeah, the final point I'll make before we get into the platform and some of the features and functionality a bit is just around diversification. So, if you look over to the right, this graph is a representation of the efficient frontier, which many years ago in 1950, I believe, somewhere in the 50s, it won the Nobel Prize for economics. But this is if you've been to a financial advisor, you've watched anyone on TV, any form of diversification is based on this theory that portfolios are most efficient at a certain point on this curve, meaning the more risk you take, the higher your expected return should go up. There's a point at which that is diminishing, as you move out to the right on this graph. But as you can see here, the blue line is your typical, think of this as your typical stock bond portfolio. So maybe this is your typical 60% equities, 40% bond portfolio. The green line is simply adding, a 20, 25% alternative sleeve to your portfolio. So what you can see here is, just simply by adding alternative investments, non-correlating investments to stocks and bonds to your portfolio, you can either kind of keep your risk constant and increase your returns slightly, or if you might be getting a little closer to retirement and you want to maybe reduce the risk that you're taking overall in your portfolio, you can scale back that risk and generally maintain a very similar expected return, again, just by adding alternatives. So, we've seen the S&P and the market double over the past 3 years. As Mike mentioned, we've printed an obscene amount of money over that time frame. We're starting to see some of the effects of that, right? We're starting to see some market volatility. We're starting to see inflation creep up. So again, these renewable energy investments, just like any alternative investment, true alternative, aren't correlated to equity or bond markets. And a lot of these off-market equities or investment opportunities are gaining a lot of momentum, as we kind of move into, the next few years here and in the past few years in particular. So wanted to spend a quick moment, and then we'll close with a quick video on just what it looks like to get started with us and how simple it is to create an account with Energea. But when you do create an account, the first thing I'll mention to each of you on this call is I know Rocket Dollar has been very instrumental in the checkbook self-directed IRA space, where you set up an LLC, and then you have a checking account that's linked to that LLC, and you can kind of make investments directly, low-fee investments on your own. I also know Rocket Dollar has recently come out with a full-on, custodial feature as well. So that's something that's an option too if you don't want to go through the effort of opening an LLC and doing it on your own. I believe they do have an option to have a custodian do that for you. And Nick can talk to that at the end a bit. But when you do set up an account with us, the first thing that it'll ask you is, are you an individual or a business? And if you select business, you can just go ahead and enter in your business information, your EIN. It'll ask you for some personal information, and you can set up a business profile on the Energea platform. And then when you get to the point after you've become verified, we've verified your identity, it'll ask you to link a bank account. And just by simply linking that LLC checking account that goes with your IRA, your self-directed IRA, you're now able to make investments directly on the Energea platform. So if you do have a self-directed IRA with Rocket Dollar that's structured that way, it's actually very easy to get started with us. This is what you'll see when you actually do create an account with us. So you'll get logged in. You'll have access to your client dashboard, which will show you your NAV or market value of your investments. It'll show you the total dividends we've paid, what your IRR is to date. And you'll be able to kind of shop and browse and peruse our investments, do your due diligence, and look at those kinds of things. All SEC filings, everything is listed on the website. You kind of get this nice breakdown that you'll see over here to the right of your actual investments and the portfolios they're in and what that performance has been. You'll see it's a little small, but all the way over here to the right, there's an option for you to kind of switch. You can reinvest your dividends with us, or you can take the dividends as cash. So if you're over the age of 59 and a half and you're retired or you're getting close to retirement, this can be nice, supplement to your monthly Social Security and other sources of income that you have coming in. But if you're like me and you're 43 years old and you're not planning on taking these dividends for a while, I think our long-term investments, long-term dividend-paying investments, pair really nicely with an IRA, and you can opt to reinvest those dividends and benefit from compound interest, which is really nice. Mike, did you have a comment you wanted to add?
I just wanted to mention that we really strive to be as transparent as possible. And while some of our clients prefer, the short and sweet because, they're busy and we understand that, we try to make the information as accessible as possible. And some of our clients, especially those who invest more capital with us, really try to get into the due diligence. And we overly report to the SEC. So every single project, you have access to the memo that we use internally to make an investment decision about every single project. So there's nothing that is hidden from you. We encourage our investors to read up. We spend a lot of time and a lot of money making sure that our information is available to you through either the SEC platform or on the Energea platform. And we hope you guys take advantage of it.
Yeah, and I'll just close here and show a quick walkthrough and kind of talk over of what investing with us or registering to invest with us might look like. So after this session, you will each be kind of redirected to our homepage, and you'll be able to create an account again in the name of your own personal, self or a business. We'll ask you for a few things: name, email address. We'll have you verify that email address. So you'll get an email, you'll come back, you'll verify that, and then you'll just basically enter some personal information here, address. We ask you, for some information on, are you an accredited investor or not? So we'll ask you for your net worth and your annual income. And that's just going to drive how much you're able to invest with us. If you're accredited, there's no limit. If you're a non-accredited investor, there are some limits that we put forth on you. So once you've done that and you've confirmed your email and you've gotten verified, then you can link your bank account. And again, if this is a self-directed IRA, LLC bank account, same thing. So you just enter your username and password for your financial institution. And we use a company called Plaid to verify that bank account is a legitimate bank account. I believe the last I looked, Plaid is a $14 billion company, private company. And they are the far and away industry leader. If you've ever linked a bank account to an investment platform such as this, it's most likely been done through Plaid.
And of course, we don't have any of those banking credentials at Energea, so you have no security risk with us. That's all held by Plaid.
Yep. And then you'll just basically go back in, shop for the investment, peruse that. We'll ask you to digitally sign a form. And you're good to go. So, I think the record, and I welcome any of you to break this record, but I think the record I've seen for somebody to create a new profile and make an investment was 6 minutes.
But don't break the record. Read the offering circulars and make sure you're fully aware and prepared to make an investment in this product. But yes. Absolutely.
Touche. Absolutely. Yeah. I got a little over my skis there. But once you've read through everything, absolutely feel free to go ahead and break the record. And then once you're in the website here, you'll see, again, all this information. We've changed this a bit up since we did this video, but you'll see your rate of return. You'll see the amount of money you've invested, your projected dividend payments. So you can kind of see each project, where you're invested, and go from there. So that's about it for, I think, our prepared remarks. I know Ryan, one of our team members here at Energea, has been kind of putting together a list of questions, so I can kind of pull those up. And then, Nick, I think the best thing for us to do, maybe go through these questions that we have here. We got a few of them. And then I know you've gotten some questions from people in advance, and we can kind of hammer those out as well.
Sure. We'll take a look at what's going on in the chat right here.
Awesome.
Well, the first one. Nice.
So Jeff, got a question from Jeff. You guys see that about dividends?
Yep, I see that. So I'll go ahead and read the question, and then Mike and I can, have that answering it. Jeff says, let's see here. I feel like there's a disconnect with Brazil being so invested in solar on one hand, and on the other, you read how they are responsible for the deforestation of the Amazon at a rapid pace. Is it that solar is their only practical way to generate electricity, and being green with solar is just a happy coincidence?
Well, I think that it's not a happy coincidence. It's that solar energy is cheap. It's the cheapest form of electricity in a place with that level of irradiance. Solar energy is quick to deploy. Solar energy is modular. It's very useful for grid operators because it can be dispatched instantly. I think that solar energy has a very practical and technological value to add to any grid. But the fact that it's zero carbon is also really attractive, I think, to most countries because every nation and, in fact, every business can feel the incoming pressure of meeting carbon emission standards. Those standards have taken a long time to develop, unfortunately, and they're still not all in place, but we're starting to see more carbon credits trading. We just saw the SEC mandate that publicly listed companies remark on their exposure to climate change in their financial statements. And so it's coming. So I think that the greenness is definitely a component of the value proposition, but so is the technological and cost aspects.
Yeah. Yeah. And I mean, if you just look at, I get this question a lot from investors. And if you look at the current administration down in Brazil, there's a big range of viewpoints, just like there are politically in this country. On one hand, Bolsonaro has done a lot to develop the solar policy that allows us to make these investments happen. But on the other hand, his administration has contributed a lot to the deforestation of the Amazon and those kinds of things. So, I think from our perspective, any solar investment, any additional solar that we can get in the ground, generating electricity and contributing to kind of the decarbonization of the grid is a good thing. There are certainly things that we wish the Brazilian administration and the Brazilian government were doing to kind of further just a sustainable climate change perspective as well.
Yeah, and I'll just also add, one of our close colleagues down in Brazil comes from a forestry background, and it is not entirely clear how rapid or not the deforestation of the Amazon rainforest is, and on what terms that's occurring. But we're seeing, there's two sides to every story here. And we can tell you from personal examples, when we build our solar projects, if there is a single tree, we generally buy farmland, spent farmland. So it's no longer useful economically or ecologically. And because we are environmentalists at the end of the day. When we come to those sites, we're looking for low impact opportunities. But if we have to cut down a single tree because it stands in the middle of a solar asset, it takes us months to get a permit called a DIA, D-I-A-I, D-A-I-A rather. And a DIA that's across the board. Anybody who wants to cut down a single tree has to go through that process. And again, so any deforestation that's happening in the Amazon is more than likely illegal deforestation, because I can tell you from direct experience that cutting down trees in Brazil is no simple task.
Yeah, I can handle this next question simply. Are the dividends qualified, meaning are they taxed at the ordinary income rate or long-term capital gains, 15-20%? And the dividends are qualified. So you'd be taxed as long as you hold the investment for a year. You'd be taxed at the long-term capital gains rates on the investments.
Right, and that would be in a taxable account. Right. So if you purchased it in an IRA, it's going to be tax deferred, ordinary income.
Exactly. Nice point, Nick. The next question: how liquid is the investment? Can you easily sell some or all of your investment shares at any time? So as of right now, as of today, it's a 3-year hold period. So we require that you hold your principal for 3 years. Obviously, the monthly dividends can be taken at any time. So that's the primary source of liquidity on the investment. After 3 years, if you wish to sell any or all of your shares, there'd be a button right there on the website where you could internally, through our platform of investors, sell those shares. Energea has the right to buy those shares back. First and foremost, and then if we didn't buy those shares back for any reason, they would go to our kind of portfolio or community of investors to purchase. But it is you're investing in solar projects. It's steel in the ground. It's silicon panels. It's not. It is a fairly illiquid investment just by the nature of it. But we are working to make the product and the platform more liquid. I know Mike and I have had internal conversations about moving the 3-year hold down to a 1-year hold. So there's definitely things that we've been discussing internally to try to make the product as liquid as we possibly can.
All right, I can go ahead and pick the next one, unless you wanted to add anything, Mike.
Nope, I think Tyler nailed it.
Okay, great. I think so too. So is this investment suitable for an IRA? So suitability is always sort of a tricky term, and that's mostly determined by whatever somebody's personal situation is. It's definitely beneficial from a tax standpoint. You can call it tax advantage to have an investment inside your IRA because it's not going to get taxed until you take it out. Once you sell it, everything's going to stay in the IRA. It's when you start taking money out is when you're going to get taxed. And there are rules around that, right? So if you're not familiar with taking money out early before you're 59 and a half, there's going to be a 10% penalty on top of whatever's considered ordinary income. But just in general, suitability really depends on, well, how long am I going to need to hold it? And am I going to have to liquidate any of it during the time that I'm holding it? So in that type of situation, it's probably not considered suitable.
Yeah. And obviously, just Mike and I were talking about this before the presentation, but, consult your tax advisor before you make any tax decisions or things that might impact your overall tax portfolio. But Nick, I think you nailed that one on the head. Next question, what type of maintenance, probably for Mike, what type of maintenance is required on these various solar projects, and are there any sourcing issues currently?
Maintenance is probably the most overlooked aspect of managing solar assets. The floor is riddled with dead bodies of solar companies who underestimated maintenance. In my career over the last 15 years, the plants have produced 104% of P50. P50 is a 50% probability factor projection estimate. So we've done really well versus our peers in productivity of these assets. And the reason why we do that is because excellence in maintenance and systems monitoring. We have everything from infrared lasers that notify us of anybody getting too close to the plant for security purposes. We have closed television networks on those plants also for security networks. We have barbed wire fencing around every single asset for security purposes. We have a series of systems monitoring that monitor weather stations, the temperature of the transformer, the temperature and performance of the inverters, the temperature and performance of the modules themselves. We monitor the meter. So we have a fairly detailed architecture that we built twice now. The same guy, Gray, who is a dear friend and managing partner of the company, and came with me from Green Skies. So we've developed detailed systems monitoring platforms twice in our careers. But the Energea system is designed to call upon our third-party contracted O&M service providers and to contract them in such a way that they are heavily motivated to respond to those the needs of the assets as quickly as possible. So that's really how we do it. And then we are experimenting now with certain remote sites with self-management of that operations and maintenance of those plants as they start to come online.
Yep. I'll take a stab at this next question, and then Mike, you can certainly add any color around it that you see fit. Question is, how is the stock priced? So again, when you make an investment, the share price of each of the portfolios, whether it be the US, Brazil, or Africa, are all going to operate a little bit differently. But essentially, what we're seeking to do is, in the case of, let's say, our Brazil portfolio, we have 5 projects that are active in that portfolio. We model out what the projected, generated electricity is going to be on those 5 projects, how much revenue we're going to collect based on the contract, and we know reasonably, what the expenses are going to be to maintain those projects. So essentially, what we do is we take all the future cash flows for those projects, we discount them back to kind of come up with a net present value of what we feel like the investment is worth today. And that's the core of how we price the stocks. And then what we do furthermore to equalize investors over time, because somebody that invests today while we're still building 3 or 4 of the projects in Brazil versus somebody that comes on board 2 years from now, once we've already built, let's say, 5 projects, we need to equalize those investors over time. So what we do is we seek to kind of look at what the IRR has been on the portfolio up until today at a certain point in time, and then what those future cash flows are going to be in the future. And we kind of discount those back to kind of set those to zero. So we try to set the share price and the stock price of each of those portfolios each day so that it doesn't benefit you to invest in the portfolio earlier or later. It's set to kind of equalize investors over time.
Yeah, precisely to equalize investors over time. And what the platform does is once per day, as Tyler mentioned, is it solves for what IRR do the existing investors have, and what share price today would need to be paid so that an investor today would have that same IRR. So share price is really an equalization tool at Energea so that all investors have the same IRR. So I'll give you an example. Like if we sold a project and all the existing investors got a big payday, the share price would go down a lot because for a new investor to get involved with that portfolio, he missed the big payday. He's got to pay a lower price to get the same IRR as those old investors. Similarly, if we have projects like many of our portfolios where we have projects under construction, well, that's a delay in cash flow. And the investors who've already been involved with the project, they're owed some cash because they've been waiting out that construction period. So the share price is going to go up so that the new investors is helping balance with the old investors' waiting period. So that's the action of the share price. It's automated and it happens daily.
Yeah, and Doug, if you want to get into that in more detail with me, Mike, or Gray, let me know, Tyler@energea.com. We can pull up a model and show you exactly how we do it. But that's the general gist of it. Nick, I don't know, did you have questions that came in before the session that you wanted to cover?
I did, but we knocked out a couple of them. I did have a couple of questions that I thought would be interesting. So you say that you go out and you buy farmland, right? So you effectively own the real estate underneath the projects that you're building.
We may, in some circumstances, we may opportunistically buy the land. But in a place like Brazil, for example, not to harp on Brazil, but in Brazil, owning land as a gringo is very challenging. So we lease land. So It depends. It's circumstantial to the market.
Right. And I know buying land in international markets is difficult. It's not the same as here. But yeah, no, that's good. Does any of that contribute to the return?
Nope. The land is an expense. So generally, the project is only interested in owning solar equipment and selling electricity and harvesting that revenue. So it really doesn't want to get involved with land speculation. We don't speculate anything at Energea. If it's not a contracted sale of electricity, it's zero. If it's not a contracted expense, it's zero. That's the way we operate. So yeah, land is not, there's no land component in the value in the stock price.
Yeah, and Nick, before
except as an expense as a lease cost.
Yeah, Nick, before you go ahead and fire off another question, I did have one other question come into the chat box here, and it's around stock symbols. So I think this is actually a really good question because it's something people kind of get confused on a bit with us. Question is, does each project have its own stock symbol, or does each project in each individual portfolio have its own stock symbol? These aren't publicly traded investments, so you're not going to find any stock symbols for the investments. All the investments are contained and done through our platform. So if you go to Energea, www.energea.com, that's where you would create your account, either a personal or a business account. If it's in the case of your Rocket Dollar self-directed IRA, it might be a business account. And you're going to get verified with us to make investments. We're going to have you link a bank account or your self-directed IRA, checkbook IRA account. And then you're going to make investments with us directly through our platform.
Our platform is the exchange. They are publicly traded securities. That's why we deal with the SEC. But we choose not to sell those securities through a listed exchange. The only exchange for which you can buy securities in these portfolios is the Energea.com website. But honestly, there's nothing that would prevent somebody from selling. I could take my shares that I own and sell them to Nick privately. They are tradable securities, but the easiest way to get them is through the Energea.com website.
Yep. So no stock symbols on any of the investments. You're gonna come to Energea.com, get verified, link a bank account, and then go ahead and make the investments directly with us.
I'll make one more point here in case any lawyers are on the call, that Yeah, so these are LLCs treated as corporations for tax purposes. And when you buy a position in an LLC, it's actually considered a membership interest, not a stock per se. So you're buying a membership interest or a pro rata share of a portfolio holding company.
Yep.
That's right. Okay, great. Probably only a couple other questions. Again, you mentioned the 60-40 portfolio earlier, and everybody is probably tired of hearing about inflation, but we know that's going to be a headwind, right? I guess offsetting that type of headwind with this type of alternative investment, even though alternatives sort of has this negative correlation or connotation with a lot of investors. Would you say that's a bit more of a modern take?
Yeah, I think so. I mean, personally, you've just seen interest rates have been suppressed for so long because of the easy money supply, decisions that the Fed has made. When interest rates are low, it's not the best time to be investing in the bond market. So, I mean, it's bond rates and yields have been low for a period of years. There's really not a lot of, I think, optimism that I'm seeing, at least for the fixed income and bond markets. Not to say that you should abandon bonds and fixed income altogether from your portfolio. I just firmly believe that alternative investments such as ours or any other real estate investment, cryptocurrency, whatever it might be, whatever the alternative asset class might be, can really help to further diversify and add some valuable yield to a portfolio if that's what you're seeking.
Yeah, and what's nice about this asset class is it's sort of it's the tortoise in the race. You're not going to have grand slam quarters with an asset class like this because we're designed exclusively to sell the electricity at a fixed agreed upon price. It's very useful for compounding yield. It's very useful for long-term investment horizons, but it is what it is. It is not volatile. That's what we like about it, but it's also, you lose some of the upside in that. So there, everyone should have, unless you're me, you shouldn't have all of your money into solar energy assets. But that's because that's my shtick.
Yes.
Yeah, nothing wrong with singles and doubles, right?
That's it all day long, and they're almost recession proof. With the exception of a customer being unable to pay, being able to produce cheap electricity is always going to have a customer. So, that's the way we look at it. These are very sound, long-term, double-digit yield, but you're not going to have, you're not going to quadruple your money in a year like you could by placing it in certain tech stocks right now, I guess.
Right. All right. Well, I didn't really have too much else to add. I really think you guys were very thorough with everything that's going on in Energea. I really want to appreciate or thank you for your time. Very much appreciate it.
Thanks for having us, Nick, and thanks,
Nick. Thanks for having us.
Really appreciate it.
All right. Everybody have a great day.
Ciao.
Thanks.